Yes, a good afternoon to everyone who is in the group. Welcome to the Mobile Money in Action Masterclass by the Digital Frontiers and Digital Frontiers Institute and the Certified Digital Finance Practitioner. My name is Edwin M Byaruhanga. I'm going to be your presenter for the day, and we're going to have a great discussion about mobile money in action. As you know, it is the number one driver for financial inclusion um, in the nation and in Africa. So today, it will be an interactive session. Our topic for today for this masterclass is navigating the future of digital financial services with mobile money in action as our case study. Before you see the screen, I will be presenting a quick presentation. If you have questions, please put them in the chat box, and then I can respond to them in the Q&A session, which will be at the end of this presentation. But a very good welcome from wherever you are today. Happy to have you here. Happy to have a competent team behind me who are making sure that everything is going to go well. Well, let's get started. So today our topic is navigating the future of digital financial services. Just a quick note as we start today on your screen. Let's observe some online platform etiquette. Please mute your microphone so that there's no background noise. Speak during the presentation. Please use the chat or raise your hand at the function. Preferably, we will do this in the Q&A. And also, please note that the session is being recorded. So let's go. So we start our discussion today by quickly just touching base and defining what digital financial services are. So DFS, famously known as DFS, DFS includes services like payment, service, savings, credit, insurance, as the screen before you, delivered through digital services as opposed to the traditional channels that we've been used to using before the arrival of digital channels. So these digital channels play a crucial role in financial inclusion and addressing the huge task that we have to do as financial inclusion enthusiasts, especially in the underserved community. And this is why DFS is a key component of financial inclusion. It gives us a chance to go where we are not able to go with brick and mortar, where the areas are hard to reach, where it may be costly to set up digital infrastructure or even physical branches that give these services to underserved and reachable communities. DFS channels and digital channels, through digital channels, gives us the opportunity to do this in a cheaper way, a more direct way to reach underserved communities. So in a nutshell, that's what digital financial services are. So there's a growing demand for digital financial services professionals, people who know exactly how to use digital channels, digital financial service products, and design them are in a huge demand, not only in the nation, not only in the region, but across Africa. Let's look at one of the channels that we have chosen is the mobile money channel because it is the most relatable digital financial service product that we can talk about this part of the world, that is sub-Saharan. So let's just take a look at the numbers. The numbers will tell us the story about the importance of digital financial services and the demand for digital financial service professionals. So mobile money agent networks grew to 28 million globally in 2024, and sub-Saharan Africa contributed 77% of this growth, totally to worldwide figures. There's a 20% increase from 2023, highlighting DFS expertise demand. So as you can see, one channel, mobile money, is pushing this transaction, Sub-Saharan Africa being the king of this particular digital financial service product. Therefore, relates to the fact or points to the fact that more professionals are needed to design, to address issues of fraud, to address growth of networks, to address digital literacy across digital financial service channels. And the list goes on and the list is endless. And so when you look at the last point of this slide, Africa led the world in mobile money transactions with 62 billion transactions. And we accounted for 65.6 of the global total world mobile money transactions. Happy to be in the area that is pushing this agenda. This creates the demand for more digital financial service professionals because the trend and the product is growing at a rate that we can only not contain but try to keep up. So what are some of the in-demand digital financial skills? So they're technical and soft skills. So the technical bit, obviously, is API. Some of them can be API integration. Fraud management and cyber security is a huge one because as we innovate, other characters also innovate negatively. Mobile app deployment is a huge one. Machine learning and AI. How can we use machine learning in digital financial service channels? How can we apply AI, for example, in our case study in mobile money channels? Can we apply machine learning to give us spending patterns, withdrawal patterns, deposit patterns on mobile money wallets that therefore we're able to predict the trend of the customer? And can AI be integrated in mobile money channels to probably predict what somebody is going to, the transaction patterns of a particular wallet, and then design a product around that? That is something that we can think of. So those are some of the soft skills, technical skills. Soft skills, obviously, because mobile money and DFS channels in general are not an isolated feature. There is a human aspect to making digital financial service channels, digital financial service products work. And you have to have some soft skills to interact with the eventual consumer of the product. And that is the human being, that is the customer. Okay? So customer centricity is quite important. What do we mean by customer centricity? We mean designing the product and making sure that the needs of the customer are addressed when we are designing this digital financial product. Therefore, that is a skill that a digital financial service professional must have. Great communication is key as a digital financial skill because then you have to teach digital literacy. You have to design and communicate relevant product features that are relevant to your eventual consumer. Digital storytelling is another one which I think is very underrated. This is key because 95% of uh, most humans under study understand better through storytelling. Even when we're children, um, the best stories that are unforgettable were told stories to us by our teachers. Human-centered design. This is something that we need more emphasis on in this field because most of us are designing products that are out of our own imagination, straight out of our boardroom, with very little input of market research or interacting with the client for whom we intend this product to be. So human-centered design is a very, very huge one. Strategic thinking and innovation is key, that you have a sit down and have strategic thinking towards how you want to deploy your product, the relevance of your product, how do you innovate a new product or existing value add-ons in the mobile money um, cycle or general digital financial services. So these are the two sub um, headings of technical skills um, and soft skills in the DFS ecosystem that you can look at improving. For example, of somebody who deals with networks, the mobile money network, an agent network. So ideally, you'd begin as an agent network supervisor, which means you're in charge of normally recruitment, training, branding of a particular agent or a particular set of agents. Obviously, this goes deeper now these days into the gender uh, composition of your agent network. Preferably, the most effective uh, agent network have been found that the more women agents you have, the better experience the customer has. That is subject to another discussion, but for today, you can begin as an agent network supervisor, okay, and grow a network. Know what it is to recruit, know what it is to train, know what it is to support, know the technical support that you need when the system is having downtime. Once you graduate from that, you can move into an area of operations lead, where now you're looking at the entire operation of the network, not just a few agents under your supervision, the entire operations lead. And then you can graduate to product manager because number one, you have been at the recruitment process, you understand the needs of your agent in your agent network. Number two, you have looked and studied the operations in your agent network. You understand what it means to rebalance or to refloat. When do agents, for example, in the mobile money network, when do agents bank their float? When do agents withdraw the most? What time are the highest withdrawals? What time and what days are the highest deposits? All this is in the operation. And as product manager now, you're looking to gauge your experience from network supervisor, operations lead, to create a product, one for your customer, but two for your agents as well. So this is where products like float credit facilities come in for mobile money agents or banking agents, uh, device uh, lease products come in for your agents to grow your network. If you want to expand into an area where simply the price of the gadget or the price of the course is too expensive, and you innovate a product where you deduct a transactional balance or transactional figure of each transaction and help the agent pay off his gadget slowly while he's gaining and while he's active. So in the manager era in your career, you're really just designing products, one for the customer, two for your agents. Obviously, for the customer, we've already talked about the human-centered design and being customer-centric. Once you have been through this product manager era, you then can graduate into um, the DFS consultant. And that means that you've understood the one, two, three steps. You're now looking at the DFS consultant. You're now looking at the larger picture. You're looking at ecosystems, not just one channel. Meaning that you're looking at, for example, how mobile money would be integrated with a banking platform. And that means how can mobile money be used to withdraw money from one banking wallet to another? And then how can mobile money be used to integrate with a platform for managing smallholder farmers for payment? So you're looking at the whole ecosystem, but in a narrow form, which is pointing you now to systems. As a DFS consultant, you are called upon to fit in the technical expertise that you've learned in the steps as an agent supervisor, operations lead, product manager. That experience now um, amounts to you becoming a DFS consultant. The last stage is ecosystem strategy. Now, you're no longer dealing as an ecosystem strategist. You're no longer dealing with the technical and physical aspects of the product or of the game. You are now at a level of strategy where you make ecosystem strategies to deploy, resolve, and solve challenges in an entire ecosystem. That means you've got the holistic view. You have been to the ground. You have been at the operation point. You have designed products. You have participated in different ecosystems as a consultant, and now you have attained ecosystem strategy as your key strength. So this is just an example of a career progression that can be done by DFS professionals. We go back to look at figures. This is just a case study, and we're using mobile money as our case study. So in 2024, we processed Africa 1 trillion in mobile money transactions, 65% again of the global total. Sub-Saharan out of that 1 trillion added 190 billion to GDP via mobile money, meaning countries where mobile money has been operational added $190 billion to GDP, to their GDP. So you can see the contribution of digital financial services, mobile money in this case, to entire GDP, to entire economies. And that's how important it is. Other future more professional roles can be network management, compliance, product development, and data analysis, which is key. So you can see we brought in another professional role in DFS, which is around regulation, which is compliance, which is a very, very key um, point now that we onboard customers using agents. The compliance with the KYC bit is quite important and cannot be ignored. So building your brand as a DFS leader and becoming a DFS go-to person may include the following steps. Number one, engage on social media platforms. I'm sure LinkedIn is a great platform to be on. X, formerly Twitter, is another one to post your thoughts. I'm not so sure about Instagram or the others. but those are the professional ones. And how to engage on social media platforms like LinkedIn. The best way to get leverage and get visibility is number one to post regularly a short your short thoughts on what on a particular topic that you feel that your expertise can grow. But the number one pusher of visibility is commenting and responding to other people's posts related to the topic where your expertise lies. And this will help you become even more critical in your thinking and enjoying to discuss other people's views. Obviously, the other one, the second one would be to share insights through opinion notes through the ecosystem. Write something that you can pen down and send through to this social platform website. Number three is to write and co-author blogs. This is a great way to get your visibility, to get your thoughts on paper, and also to partner with like-minded people, even though sometimes you may co-author a blog with somebody that you may not agree on certain points. And this is the best mix I've found from experience, that it gives you quite a perspective on what the other person is thinking. Obviously, endeavor to attend industry webinars. There's so many online. Pick the ones that are relevant to your field of expertise or your BFS professional journey goal, and conferences as well. And please, when you attend these webinars, do not be a silent backbencher who logs in and then goes to WhatsApp. Pay attention because there are key nuggets that are dropped in these webinars and conferences. To the conference, please make sure you're at the forefront, not at the background. So also build influence through peer-to-peer solution crafting. This is very, very key for ecosystem development and leadership. Be the go-to person for solutions. And how do you do this? By interacting a lot with your peers. If somebody is working in a mobile network operator, let's say like MTN, and another is working in a bank, please feel free to craft or help them discuss solutions to their solution to their wallet creation. Most of us see this as a competition. No, he works in a bank and in a telco. We are at loggerheads. But ideally, we want to remove the the history or the stigma or the culture of competition in DFS and promote the culture of collaboration. And that is how we are going to grow. Because at the end of the day, if I withhold information as a mobile network operator staff from a bank staff who is building um, a wallet, generally it hurts the person who is underserved, who will then have to wait longer for the product to get to them. Number two, it stagnates the ecosystem as a whole because everybody is holding on to the knowledge that they know. Number three, myself who has withheld that information, I do not grow in knowledge. I only keep what I know, and I think that what I know is enough. And probably I would have learned from this exchange with the banking sector how it is done. Number four, uh, change is a fact of life, and that means if I withhold information today as an MNO staff, tomorrow I'm going to join bank, and then I will have missed that chance to learn about banking before I join banking. Myself, I have been blessed enough to touch each of these critical sectors, and I can tell you it is a different ball game every time you change professions or the field that you're playing within the digital financial services. So Build influence through peer-to-peer solution crafting. Share as much information knowledge as you can with people from different different um, different areas. I encourage a lot of discussion, a lot of interaction with regulators who may not be necessarily on the technical side, integration building, because I can tell you that the regulator is the first stopper. You can innovate all you want, you can build all you want. If you do not get the regulator to walk with your journey with you will find them at a certain point X. So the interaction with regulation from the start is quite important. So we're going to go into a Q&A and discussion. Let's discuss the vision opportunities, your DFS journey, any questions about the mobile money operations course, which link should be in the chat right now. Click and register for that course. I have done it. I have benefited mounts and mounts from it. I know Caitlin and Brianna will drop the link from DFI in the chat box, and we're going to go into that and then have a discussion. Looking forward to getting your discussion and really giving some good answers. The key takeaways for today before we go into discussion. So the mobile money industry, as an example, has high growth and professionals are in demand. A quick look into mobile money right now and what's hot and what's new is digital lending via mobile money platform. Are you the person who can do the data analysis onto digital lending? Are you the machine learning expert who's going to give insight into digital lending? Are you the AI expert who's going to bring a predictive model onto the mobile expert? Are you the blockchain expert who's finally going to integrate blockchain and mobile money? Are you the expert who's going to give us a different perspective on how mobile money can impact green economy? The list is endless. So professionals are in demand. It's up to you to skill yourself in the area that you feel passionate about, in the area where there's need, and attach yourself to a DFS skill that is critical to solve today's problem. And I pray that we attach ourselves to solutions that will solve African problems first. I know very many people are creating apps and creating websites and creating trading plans. That's all fantastic. But when we get to the basics, is your product going to help somebody in your rural area, in your roots? Is it relevant to them? These are questions that we ask, and therefore, is the skill that you have relevant to developing that skill? I say African solutions for African problems first. Okay, so then we proceed. You are able, I think, to see the link by now. Enroll for the mobile money operations course. Build your career and drive impact through innovation. Thank you, and I would like to hand over to Caitlin.
Thank you, Edwin. So I do see we have a few questions. First one from Mr. Abdul asking, what are the limitations of mobile money in covering the financial realities of underserved communities?
In my opinion, one of the limitations of mobile money is that ideally the mobile money product is device based, meaning that you have to have a device in order to carry that wallet. And then, as we know, the price of devices and the reach of devices is quite high. So when we look at the limitations of using mobile money as a tool to reach the underserved, that's a limitation. What? Because it is device based. Two, I would think that the costs of mobile money, the costs of mobile money are quite high compared uh, to the to the to the to the earnings of the underserved communities. For example, if I am sending or withdrawing 10,000 Uganda shillings, which would be maybe about $3, the the cost of me withdrawing that is maybe 1,000 shillings. Now, most of the African society in Sub-Sahara live under the poverty line, and they live on less than $1 a day. So, if the cost of mobile money is going to be more than what I live on, I would rather do um, without it. So, those are two of the limitations that I see with mobile money.
All right. Our next question being, why are telecosts still rigid integrating with? What should be done to increase access to smartphones?
I'll start with the last one. What should be done to increase access to smartphones? So the question that we need to ask ourselves is, um, who needs the smartphones and why do they need the smartphones before we can address the issue of smartphones? So mostly in Africa, the smartphone high penetration is in the urban areas. When you go to the rural areas, the underserved communities, you find there's basically feature phones and then they downgrade from that. So until we can find relevance for smartphones aside from merely receiving and sending money, I think it will remain a luxury upcountry, but in the rural areas. But to answer your question directly, obviously there's things that we can do to reduce the prices of smartphones that are imported into countries, which are surrounded around taxation of the gadgets that's coming. So there could probably be some subsidies, but that's a long discussion between government and partners. But also ideally to find other solutions that are not smartphone based, maybe a lower grade phone that does the same features. But ideally, we need to define what smartphones help us do. And are we able to have a smartphone that is basic, that guarantees digital educational literacy, but also has some apps that allow me as a rural person to access either market information as a smallholder farmer or helps me to put my um, product online. The relevance of the smartphone has to be really, really defined in Africa. Thank you.
All right, thank you. Our next question from Israel. How successfully do I integrate machine learning into mobile lending?
That's a very good question. Yeah, so this is an area I think most uh, entities are afraid to enter or are entering with caution. But I think it's a fantastic opportunity for us to even get deeper learning. So machine learning and mobile money would be a fantastic marriage because the machines obviously need data to learn and go by certain parameters that will give you a figured out result, a predictable result. And the raw material for these machines would be the transactional data and time logs that this has happened. So it can be successfully done by doing a backlog insertion of traditional mobile money data into a machine learning model that then can give you for a specific period, let's say 6 months, to say your highest transaction hours are this, your lowest transaction hours are this, This is your busiest area. This is your busiest agent. This is your uh, highest agent transaction area. Basically, those models can be played around with, varied around with. But from my end, I'm looking forward and excited to see someone do it with a much more deeper insight and deeper intention to studying what is happening within the what is the transaction of the thing. So I think machine learning would do us a world of good in this area.
Right, thank you, Edwin. We have a question from Monday asking, how do we regulate proliferation of mobile money in Africa to ensure people don't just come and harvest people data and go?
Thank you for that question. Oh yeah. So there's a lot of laxity when it comes to data around the mobile money area. And why do they say that? Why do I say that? It's because anyone who integrates seems to have access to, for example, my number. And this goes down to regulation. A regulation which should be able to give me the regulation which should be able to give me the power to say no to sharing my data to any integrated partner, that comes onto the platform. Therefore, the telco should seek my consent before sharing my number with a partner they have integrated to. So it really comes down to policy and regulation and how stringent that is. It just means that we need to work more on data protection and consumer protection laws regarding this mobile money data, customer data action and access. Thank you.
All right, on to our next question from Gonzale. On DSF Carrier, how many years of experience do you need to be DFS consultant?
Um, very, very interesting question there. The monopoly over how many years you need is really a question that can be debated back and forth. But however, in reality, it takes some time to build this expertise. It takes some time to learn these things. It takes some time to build your network. So I would say you would start thinking um, getting getting your digital expertise out there with 5, 6, 7 years of experience in working maybe in 2 areas or 3 areas where you have DFS experience. Say, for example, you've worked in a bank, you've worked in a microfinance, which is let's say the banking sector, you've worked with the telco, you've worked with the fintech, you can even have worked with the regulator. 5 to 7 years of doing that field which you feel you will have expertise in should give you enough experience to begin your DFS expertise journey. The better option, obviously, is to have a variety of experiences on your journey. You've done quite a few things along the way. I always strongly advise people not to have monotonous journey. Say, for example, you've been in banking for for 10, 15 years, and this is no offense to the bankers, but um, the monotony in your career will rob you of the experience of having gone out there and tested different things and interacted with different minds. So I would say 5, 6, 7 years. Thank you.
All right, thank you. We have a question from Noor Rahman. We have seen in Pakistan when G2P were channelized through digital modes of payments, the recipients of the program payments didn't have the requisite digital and financial literacy to operate transactions and would always require a third person to perform transactions, which led to leakages. Please shed some light on the importance of digital and financial literacy versus DFS usage for G2Ps for the underprivileged.
Yes, that's a massive question and very interesting case study. So ideally, what the challenge is in G2P products, G2P programs, is again one the around the curating of the product. Would expect that governments would understand the end user of their product and therefore curate it in the most basic way that the product can be understood by the underserved communities. In most cases, you find the discussion has gone on away from these communities rather than involve them. So, creation of the product is one, but that also shows you that, for example, for that product, that project, that also shows you that government did not take time to do some critical field research that indicated digital literacy levels, digital device penetration, and the general digital ecosystem picture before they deploy that product. So it is critical that digital literacy programs go before or are deployed before digital device deployment, digital product release, such that by the time the community, the intended community, and the underserved community are receiving a digital device and are receiving and are trying out digital products, they are aware digitally of how to handle what has come. What happens mostly with government programs or G2P is that we deploy devices and with products that the last mile does not even understand. So it is critical that digital literacy programs are a precursor to government to person programs and to establish and measure the digital literacy levels before deployment of G2P programs. Thank you.
Thank you. On to our next question. In a hybrid instant payment scheme that aims to integrate and interoperate instant payments for bank accounts, digital wallets operated by banks, and mobile money wallets, there's usually some initial resistance. What are the major objections or fears that may discourage them from joining the scheme? Based on your experience, what strategies have been effective in onboarding mobile money operators to the instant payment scheme?
Yeah, thank you for that question. So the resistance is not only unique to instant payment schemes, resistance is everywhere. But normally, as the question has highlighted, there is the concentration of resistance in that area. So the anecdote to resistance is trust. One of the things that we do not talk about most in or more in DFS is the currency of trust. And how do you build a currency of trust? It is one-on-one interaction with your intended customer, literacy programs that we just said, and support. Those are the three components of building trust in the DFS ecosystem. So once you address trust, once you address literacy, once you address support, there should be no issue or very little resistance for peers to join instant payment because the resistance comes from their lack of understanding of the value that instant payment ecosystems or platforms bring down to them. So, in my experience, the projects where we have had resistance to uptake or resistance to change in tariff or resistance to a particular product, we have had to revisit the customer's queries needs. We have had to revisit the customer's understanding of the new product. We have had to revisit our support because in that area there is an issue where somebody will onboard a customer who will enjoy a product but not support him. And then this customer will become a dormant support, and you don't want one dormant customer on your network, because then that spreads, the complaint spreads to everyone else apart from you. So I would address that resistance to instant platforms by revisiting those three issues that I've mentioned. Thank you.
Okay, and we have a follow-up question from Israel. So we have the experience of machine learning and other algorithms failing to solve the transaction reversal problems in Uganda. How do we go about automated transaction reversal without creating an environment for fraud?
Yes. So the issue around automated reversals is also quite an interesting one, because I know that some telcos put it out, and when you try to reverse that, it's not quick enough. I think the discussion really is around the model of the machine learning that they're using. I would integrate um, I would integrate different mix of machine learning, probably some AI, but that's on the technical bit. The challenge with that is you don't get the right learnings from that experience. I'm not too sure that the current machine learning models are the correct ones to get us there. Maybe we'll just have to continue the discussion and try to learn as wide as we can possible. This is something that is fresh. It's something that is ongoing. Therefore, I, I would be telling a lie if I said this is the way forward. These are new technologies that we all need to work together to see the solution.
Thank you, Edwin. That seems to be all our questions for now. Everyone, please note that you are welcome to raise your hand and I can unmute you if you would like to verbally address your question to Edwin. That is also an option. And yes, please continue using the chat box. I see we have about a few minutes left. So please use this time wisely and ask Mr. Edwin all the questions you may have. All right, here we have a question. What are the future of digital platforms beyond payment? Why is it so hard to get traction on other areas like lending, insurance, saving, etc.?
Yeah, very good question. So the digital platform culture, as I would like to call it, has been skewed for a very long time. The way we were introduced to digital platforms, our number one product, our induction use was send money, receive money, make a payment, and that is it. In other ecosystems that were careful enough to add additional services to payments and diversify what the payments were for, have actually gone on to do great and mighty things. I'll give an example of comparing the digital literacy and versatility of an M-Pesa user and a digital literacy and versatility of another telco. Most chances are most likely that your other telco X will know how to load airtime, send money, receive money, and that's it. An M-Pesa user, however, knows how to pay for insurance, borrow money, do some savings, pay for medical, because the cluster of products that was introduced to them was done systematically. In most mobile money or digital platform ecosystems or propositions, the owner of the platform stops at one product, and if that product is making money, the rest will come much much later. Instead of graduating their customer from payments to lending to saving to interest. So to answer the question why it is hard to get traction in other areas like lending has picked up now. The question really is whether the default rates are low or high, depending on which entity you're looking at. I think the other area that we need to look at critically, because we are in Africa and our infrastructure is a bit limited in many areas, but yet the need for access to finance remains rife and grows every day, is our credit scoring, alternatives credit scoring. So mobile money wallets, bill payments, um, ride hailing data should be able to give us a picture around the credit scoring. Should be able to contribute to my credit scoring. That's alternative data. Because when you go to the bank, you know how long it takes and what they request for. So our value proposition in lending, insurance, and all this is quite good. So the best way to get traction in those areas is to have better value propositions, affordable products. For example, the lending and the interest rate. Insurance is something that would be huge on the mobile money platform. We still don't get it yet. Even those who consider themselves middle class do not do it. Saving has been around since time immemorial, but saving without an intention or a goal is really just money fitted there or data fitted there. So we need to change the way we approach certain things. Thank you.
Thank you, Edwin. And I see we have a raised hand from Stephen. Stephen, you may go ahead.
Hello, can you hear me now?
Yes, Stephen, we can.
All right. I in Africa, I think one of our roadblocks in the underserved, which are mainly in the rural areas, is accessibility to network, that is telecom. What is the industry player going to do to mitigate this problem so that there will be mobile money activities or for the underserved, that is on the bank? What the industry player is going to do? How are they going to come together to have a successful negotiation so that the rural dwellers will fully participate in mobile money operation? Thank you.
Yeah, thank you, Stephen, for your question. I guess obviously the number one, if there's a challenge, the number one is to their deployment game. But as already said, that's a challenge. So while the cost of deploying infrastructure to reach the underserved also is a high cost to the industry player. So we have to look at that and be cognizant of that. Um, so what are the cheaper options? Are you going to break down? So one of the key players that game changers that has emerged as an alternative to deploying infrastructure and all these services, the last mile is building an agent network. Rather than build 5 bank branches, which will cost you a ton of money, have an agent network where The underserved community interact every day, meaning it is your shop mama who gives you milk every day, meaning it is your butcher, meaning it is your salon around the local communities that helps break into those underserved areas. And we successfully built, whether it's mobile money, whether it's agent banking, we have successfully um, built those rails and sent down those services to the people. So the other challenge though would be that when you deploy those agent devices and those agents are now working for us and available, there are questions around connectivity of the machine. There are questions around float rebalancing. There are questions around security. If I have too much cash as an agent and I'm in an underserved community which is poor, I risk being mugged. So those are all after deployment challenges that we have. But ideally, the most logical way is to cut the cost for the industry players through agent deployment. Yesterday.
All right, thank you very much.
Welcome.
Thank you, Stephen. I see we have a question in the chat box from Evelyn. How can credit reference bureaus better collaborate with mobile money operators to integrate alternative data like transaction history, wallet behavior, and digital repayment trends into credit scoring models for the underserved?
Yeah, so the credit reference bureaus obviously have a lot of work to do. Um, I don't know how digitized most of them are, but ideally, I would think that my transaction history and transactional footsteps would be enough to define what I call a digital habit or my digital behavior. Um, I was giving an example the other day that if I use my credit card or what we call a debit card in Africa to fuel at a particular station and buy commodities at a particular supermarket repeatedly and pay for my online Netflix at this particular time, my aggregated transactional data should be able to give um, should be able to give my bank a credit score of a certain scale, or maybe let's say 0 to 10 should be able to give me a 5, which has a meaning. Meaning that with the aggregated transaction totals that they can see from me using my wallet, me using my Momo wallet, should tell them that I spend about 500,000 or $200 a month on fuel, supermarkets needs, bill payments, and entertainment. Ideally, that information, the credit bureau would be able to give me a rating of X, which is able to help the my bank give me that particular extension, whether it is an overdraft of that amount, because anyway, I'm going to spend that money. So the credit reference bureaus can do better if they digitize even further and collect versatile data or different types of data, not only on my not only on my mobile money, watch my integrate with my bill payment supplier, integrate with supermarket, integrate with daily ecosystem interaction points. Then you can describe me digitally and describe my digital behavior. Then you can give me a holistic um, credit reference bureau. I always give an example of a small shop near uh, somebody's home. In Africa, we have this small kiosk, an SME, where most of us go to when things are bad. When the child is rough, you go and say, look, give me 2 loaves of bread and a pack of milk. I will bring the money later. Those are the real credit score champions. Those are the guys who know me in and out because I'm off the grid, but what is my credit reference with my surrounding area? So I think digitizing those different points would give credit reference bureaus a much better holistic um, rating for individuals. Thank you.
Thank you, Edwin. All right, everyone. So we have just enough time to go through two more questions. So our first one is, in terms of technical integrations of mobile money operators with instant payment switches, are there any standards that guide mobile money interoperability? What are the best practices for the technical onboarding of mobile money operators?
Yeah, thank you. So before I answer that question, I would say the details are in the course, which the link has been, I think, shared somewhere there. So it would be fantastic for you to go into that. Obviously, there is integration standards, which the mobile money network, or sorry, the mobile network operator have themselves. The payment platforms obviously have the um, uh, integrated standards of integration that they have. But they have not, unless somebody would help me and tell me or educate me, I've not seen a universal integration standard because the ecosystems and the needs vary from place to place, vary from need to need, vary from technical uh, requirements. So, but ideally you should have two sets of integration standards. One would be the one would be between the two parties and how they can integrate. I will give an example of a case study or a project that I've worked on, which was integrating 25 banks in Uganda to validate the KYC project, electronic KYC, which would help validate national IDs. And the main project holder was had their own integration standard, but each different bank out of the 25 had their own integration standards and their own integration procedure. It was very difficult to have a uniform integration procedure or policy. So yeah, I'm just trying to show you that it varies. So we had to, for each bank, we had to sit down and agree the parameters and then also agree on how the APIs would be integrated to each other. So it just really depends. But ideally, the two parties should have in writing integration standards that they flow by for external integrations. Thank you.
All right, thank you. And yes, time for our last question. Like Brianna has said in the chat box, if your question was not answered, please make your way to our LinkedIn page in which someone from our DFI team or Edwin will respond to your question. Okay, Nicole, thank you for our last question for today. And it is, do you think research on financial inclusion in Africa is biased? I am asking because I'm yet to see the financial inclusion plan for people with disabilities or products that are designed to serve people with disabilities too.
Thank you for the question. I was shaking my head before she finished asking the question because I've been asked the same question myself. So, is mobile money a holistic product? For me, the answer is no, and because it does not directly cater for people with disabilities, even just people with mental health challenges. So it's not all inclusive. It seems to suggest that you have to be 70% able, both mentally and physically, to use the product. So the question for me, the answer to that is that it is biased. And I would have thought by this time that for people with disabilities, there should be a product spin-off that would be geared towards them, but also um, the cost, the cost of the cost of serving or the cost of me transacting as a person with disabilities or someone with a person with disabilities should be ideally lower as a give back to community. But the answer to that is obviously I think it is not holistic and it is to some extent biased. Thank you.
Thank you, Edwin. And that concludes our wonderful presentation from Mr. Edwin today and all the questions that we have. And yes, again, if you have any more questions or your questions were not addressed in today's session, please make your way over to our LinkedIn page where our DFI team and Edwin will have the opportunity to address any questions you may have. Thank you, everyone, for attending today. It was so lovely to see the turnout and wishing everyone a lovely day further. Thank you.
Thank you. Thank you, everyone.